All right, get ready because today we are going back in time, over a century actually,
Oh, wow.
back to 1912
Okay.
to explore the psychology of the stock market.
All right.
So you shared some excerpts with me from The Psychology of the Stock Market,
Huh.
up by George Charles Selden. I
Yeah.
gotta say, this book, it's like a secret decoder ring for understanding.
Mm-hmm.
You know how markets really work,
I agree.
even after all this time?
It's amazing how much human behavior has stayed the same,
Yeah.
over the years in the markets. I mean, Selden's insights, they're still so relevant today, even though the markets themselves, they've changed so much.
That's so true.
Yeah.
So today, let's uncover some of those timeless principles
Okay.
and see if we can't figure out how they apply to today's, market craziness.
Sounds good to me.
All right, so Selden, he kicks things off by talking about this thing he calls the speculative cycle.
Okay.
And he basically lays out these distinct phases the market goes through,
Right.
starting with dullness. Then you get a gradual rise,
Mm-hmm.
and then some bearish resistance
Yeah.
before public enthusiasm
Okay.
kicks in and drives things to a peak.
Makes sense.
But eventually, of course,
Yeah.
that leads to a rapid decline,
Right.
bargain day,
All right.
and then back to dullness again.
Yeah, it's cyclical.
Where it's like a financial roller coaster.
It really is.
And what I think is so fascinating
Yeah.
is that Selden really emphasizes
Mm-hmm.
that this cycle isn't driven by
Right.
some mysterious algorithm out there.
Mm-hmm.
It's really driven by good old-fashioned human emotions,
Exactly.
hope and fear.
Hope and fear drive everything.
So these emotions create predictable patterns in how prices move.
Absolute. I mean, think of it this way.
Okay.
You're trying to predict where a flock of birds will fly next.
Okay.
You can look at the wind direction.
Mm-hmm.
You can look at the bird's physical condition.
Right.
But you also need to consider their mood.
Oh, okay.
Like, are they spooked?
Right.
Are they feeling confident? That's market sentiment
Huh.
in a nutshell.
So you're saying that understanding how the crowd is feeling,
Mm-hmm.
like
Yeah.
if everybody's, optimistic or pessimistic,
Yes.
is just as important as analyzing a company's financial reports.
Absolutely.
Wow.
Yeah, it's all part of the picture.
Okay, so if I'm following you,
Yeah.
I should be paying attention to overall market sentiment,
Mm-hmm.
just as much as I'm looking at a company's earnings reports.
You've got it.
Okay.
Now, Selden also talks about something called inverted reasoning.
Okay.
And this is where things get a little bit tricky.
Okay, I'm all ears. Lay it on me.
Okay, so imagine this.
Mm-hmm.
Sometimes good news about a company
Yeah.
can actually cause its stock price to drop.
Wait a minute.
Yeah,
That seems completely counterintuitive.
it is.
Why would that happen?
Because experienced traders, the pros, they're already thinking ahead. They're
Right.
not just reacting to the news itself.
Right.
They're trying to anticipate how the average investor,
Okay.
the crowd, will react.
Right.
And often they'll start selling ahead of that reaction,
Wow.
which can push the price down,
Okay.
even if the news is positive.
Huh. That's really interesting.
Yeah, they're playing a different game.
Okay.
Like chess masters thinking several moves ahead.
So they're looking beyond the immediate hype
Yes.
and trying to figure out what the long-term consequences might be.
Precisely.
Okay.
And this is where Selden's warning about adjusting everything to manipulation comes in.
Okay.
Yes, there are powerful players who try to influence the market,
Right.
but not every price movement
Mhm.
is some kind of conspiracy.
Okay.
Sometimes it's
Yeah.
just experienced traders
Right, yeah.
anticipating the crowd's behavior
Okay.
and acting accordingly.
So instead of, crying manipulation
Mm-hmm.
every time a stock moves unexpectedly,
Yeah.
maybe we should just take a step back
Mm-hmm.
and try to understand the forces at play.
Exactly.
Like this inverted reasoning thing.
It's all about developing a more nuanced and informed perspective.
Okay, now this next part really piqued my interest.
Okay.
Selden talks about this mysterious force called they,
Oh, yeah, they.
which sounds kind of like a shadowy cabal controlling the market from behind the scenes.
Right.
He even seems to suggest
Yeah.
there are different interpretations of who they really are.
Well, sometimes they refers to floor traders
Okay.
on the stock exchange.
Right.
The ones actually executing buy and sell orders.
Okay.
Other times it's the big capitalists, those with the deep pockets and the influence.
Yeah.
And sometimes they even represents the public as a whole,
Wow.
acting as this massive collective force
Okay.
driving market trends.
So are you saying there's no single they?
Exactly.
Okay.
Selden's point is that oversimplifying market forces is dangerous.
Right.
There isn't one puppet master
Right.
calling all the shots.
Okay.
Instead, it's more like this intricate dance. involving different players with their own agendas and strategies, constantly interacting and influencing one another.
It's like a giant potluck
Yeah.
where everyone brings a different dish.
Yeah.
And the final flavor depends on,
Yeah.
all of those individual contributions.
I love that analogy.
And just like at a potluck,
Yeah.
sometimes a dish you thought would be a hit ends up being ignored,
Right.
while a surprise addition
Yes.
steals the show.
Exactly.
So there's always an element of unpredictability.
You got it.
That's a good reminder that even with all of our fancy algorithms
Yeah.
and, expert predictions out there,
Mm-hmm.
we can't always predict what's going to happen.
No, we can't.
Speaking of predictions,
Okay.
Selden dives into this concept of discounting,
Okay.
which is basically how the market tries to anticipate future events.
Right. The market isn't just reacting to the present. It's constantly trying to forecast what's coming next.
Right.
And when something is widely expected, like a company's earnings report
Okay.
or a big political announcement,
Yeah.
the market often prices that information in before it actually happens.
Like when you wait for something to go on sale.
Yeah.
You already know the price will drop eventually.
Exactly.
So you factor that into your decision making.
Exactly. But here's the catch.
Okay.
Some things just can't be predicted.
Right.
Like Selden uses the example of the San Francisco earthquake.
Oh, yeah.
No one saw that coming.
No kidding.
So even the most sophisticated algorithms
Right.
and expert predictions,
Yeah.
they can be thrown off by those unexpected events.
So the market is forward-looking,
Yes.
but it's not a crystal ball.
Nope, it's not a crystal ball.
Which brings us to another fascinating point Selden makes
Okay.
about how our personal biases can cloud our judgment,
Yes,
even when it comes to investing.
absolutely.
He calls this confusing the personal with the general.
It's a common trap,
Yeah.
even for seasoned traders.
Yeah. I can see how.
We tend to let our own positions in the market,
Right.
whether we're winning or losing,
Right.
influence how we interpret information
Mm-hmm.
and make decisions.
Like if you're sitting on a big loss,
Yes,
it's tempting to ignore warning signs
Right.
and just keep hoping things will turn around.
exactly. And Selden has some really good advice for how to avoid this trap.
Okay.
He says, we need to detach from our emotions,
Mm-hmm.
step back from our individual trades, and focus on the market's overall direction.
So detach and refocus.
Yeah.
He even tells this story about a trader
Oh, yeah.
who would intentionally trade
Mm-hmm.
against his own convictions.
To test his objectivity.
Talk about commitment to unbiased decision-making.
It's amazing.
It's a powerful reminder
Yeah.
to challenge our own assumptions and make
Mhm.
sure we're not letting our emotions get in the way.
It's so easy to do.
Now,
Mhm.
Selden also paints this really vivid picture
Mhm.
of what happens during panics and booms.
Yeah.
Those times when the market
Right.
seems to completely lose its mind.
Yeah, he really captures the drama, doesn't he?
Yeah.
The way he describes fear-driven selling during panics,
Yeah.
it's almost chilling.
Right.
You can practically feel the desperation in the air.
Yeah, it's like a stampede.
Yes.
Everyone's so focused on escaping
Right.
that they stop thinking rationally.
Exactly.
And then on the flip side,
Yeah.
you have those booms
Yeah.
where exuberance takes over.
Everyone's an expert.
And suddenly everyone thinks they're going to be rich.
Selden calls those folks imaginary millionaires.
Oh, right.
Convinced they struck it rich.
Yeah.
Only to see their fortunes vanish
When the bubble bursts.
when the bubble bursts.
It reminds me of all those get-rich-quick schemes we see today,
Right.
promising instant wealth with little effort.
If it sounds too good to be true,
Right.
it probably is.
But I think what's really interesting is Selden's point
Mm-hmm.
that panics are rarely sudden explosions.
Yeah.
He says they're more like
Like slow burns.
slow burns,
Yeah.
where fear and uncertainty
Yeah.
build gradually
Mhm.
until they reach a tipping point.
And we've seen this play out
Yeah.
in recent market downturns.
So it's a really important insight, especially for investors.
Mm-hmm.
It means paying attention to those early warning signs,
Yes.
those subtle shifts in sentiment
Right.
that can foreshadow a bigger downturn.
Don't just wait for the headlines to scream panic,
Right.
because by then it might be too late.
So instead of trying to time the market perfectly,
Mm-hmm.
it's more about being aware of those underlying currents
Yes.
and managing risk accordingly.
Exactly. And it works both ways.
Okay.
For booms, too, exuberance can also build slowly feeding on itself until it becomes unsustainable.
Okay, so let's say I'm trying to apply this to my own investing.
All right.
What are some practical takeaways from Selden's insights?
Well, first remember that markets are cyclical.
Okay.
What goes up must eventually come down, and vice versa.
Okay.
Don't get caught up in the hype,
Mm-hmm.
whether it's fear or greed.
So basically,
Right.
don't panic and don't get too greedy.
Exactly.
Easier said than done, though.
Definitely.
But that's where the second takeaway comes in.
Right.
Cultivate a balanced mind.
Yes.
Selden talks a lot about the importance of avoiding
Yeah.
extremes of emotion,
Right.
both the euphoria of booms
Yeah.
and the panic of crashes.
Uh-huh.
It's about staying grounded,
Yes.
making rational decisions based on careful analysis,
Yeah.
not just gut feelings.
Exactly.
It sounds like a lot of this comes down to self-awareness,
It does.
understanding your own biases and tendencies
Very important.
as an investor.
Now, Selden also goes into detail about
Okay.
the different types of traders
Okay.
who make up this complex ecosystem.
Right.
He talks about impulsive traders,
Okay.
driven by instinct and emotion, always eager to jump into the action and ride the waves of market volatility.
Sounds a bit like someone I know.
Maybe.
But then you have the phlegmatic trader,
Yes.
who's more cautious and methodical,
Yes.
preferring to wait for the right opportunity
Right.
and carefully strategize their moves.
They'll often use what are called scale orders
Okay.
to buy or sell
Mm-hmm.
at predetermined price intervals.
It's like a tug-of-war
It is.
between those two forces.
Yeah.
The impulsive traders create all that volatility and momentum,
Hmm.
while the phlegmatic traders try to maintain some stability.
Yes. And Selden points out that phlegmatic traders
Yeah.
often use those scale orders to
Wait.
buy or sell
Yeah.
at specific price points.
Right.
Think of them like setting tripwires in the market.
Okay.
They'll automatically trigger a buy or sell order
Mm-hmm.
when a stock reaches a certain price.
So it's like having a robot assistant
It is.
to help you execute your trading strategy.
Exactly. And these scale orders can be incredibly powerful
Okay.
because they take emotion out of the equation. Right.
They help to ensure
Yeah.
that you're buying low and selling high,
Right.
even when the market's going crazy.
That's really interesting.
Yeah.
So how can I, as a listener,
Yeah.
use this information to my advantage?
Well, understanding how those scale orders work can give you a deeper understanding
That's correct.
of how prices move.
Right.
If a stock is falling
Mm-hmm.
and you see a lot of buy orders
Yeah.
clustered around a certain price level,
Okay.
that might indicate strong support
Right.
and a potential buying opportunity.
So it's like a hidden layer of information
It is.
that can help me make more informed decisions.
Exactly.
Wow. So there's a whole lot more going on beneath the surface
Yeah.
of the market than what we see.
Absolutely.
simple.
Now let's talk about one of Selden's most crucial points,
Okay.
the importance of mental attitude
Right.
for successful trading.
Yeah.
He stresses the need to cultivate a balanced mind.
Mm-hmm.
Avoid getting fixated on single ideas. Okay, wait, hold on. What does he mean by that?
Sure.
Getting fixated on single ideas.
Let's say you read a news article
Okay.
that predicts a particular stock is going to skyrocket.
Mm-hmm.
You get so excited about this one piece of information
Yeah.
that you ignore all other factors,
Okay.
like the company's financials or
Right.
the overall market trend.
Yeah.
That's what Selden means by getting a notion.
Okay.
You become so attached to this one idea
Mm-hmm.
that you lose sight of the bigger picture.
Ah, so it's about avoiding tunnel vision
Exactly.
and staying open to different perspectives.
Yes. And Selden also warns against relying too heavily
Okay.
on hunches,
Okay.
especially for those who are new to trading.
Right.
While intuition can play a role,
Okay.
it needs to be tempered
Yeah.
with knowledge,
Mm-hmm.
experience, and objective analysis.
So instead of just following my gut,
Yeah,
I should be asking myself, what's the evidence supporting this hunch?
exactly.
What are the potential risks and downsides?
It's about making informed decisions,
Right.
not impulsive ones.
Okay. And one of the best ways to develop this self-awareness
Yeah.
is through journaling
Yes.
or self-reflection.
By tracking your trades.
So like keeping a diary of my trades.
Exactly.
Okay.
Analyzing your thought processes.
Right.
You can start to identify those patterns
Really?
and biases that might be tripping you up.
It's like having a personal therapist.
It is.
For your trading psychology,
Yeah.
you can uncover those limiting beliefs
Uh-huh.
and develop strategies to overcome them.
And this is something anyone can do,
Right.
regardless of their experience level.
This is all starting to make so much sense.
Good.
It's like Selden is giving us a roadmap
Yeah.
to navigate the psychological minefield
He is.
of the market.
He really is.
I don't know about you, but I'm already feeling
Yeah.
a lot more insightful about how the market works.
That's great.
And we're only just getting started.
I know, right? There's so So much more to uncover.
I can't wait.
It really is fascinating how these principles from over 100 years ago still apply today.
Yeah.
It goes to show that human nature doesn't change all that much.
Totally,
Cool.
even if the markets do.
It's like we're getting a sneak peek into the minds of traders from a different era.
Right.
And speaking of timeless insights,
Okay.
Selden has a whole section on panics and booms.
Oh, yes.
Those times when the market seems to go completely haywire.
He really captures the drama, doesn't he?
Yeah.
The way he describes fear-driven selling during panics,
Yeah.
it's almost chilling. You
Right.
can practically feel the desperation in the air.
It's like a stampede.
Yes.
Everyone's so focused on escaping
Right.
that they stop thinking rationally.
They do.
And then on the flip side, you have those booms
Yeah.
where exuberance takes over
Everyone's an expert.
and suddenly everyone thinks they're going to be rich.
Yes. Selden's imaginary millionaires,
Right.
convinced they've struck it rich,
Yeah.
only to see their fortunes vanish when the bubble bursts. It reminds me of all those get-rich-quick schemes we see today,
Yeah.
promising instant wealth with little effort.
If it sounds too good to be true, it probably is.
Right.
Right?
But I think what's really interesting is Selden's point that panics
Yes.
are rarely sudden explosions.
He says they're more like slow burns.
Yes, labor.
Where fear and uncertainty build gradually
Right.
until they reach a tipping point.
And we've seen this play out in recent market downturns.
That's a really important insight,
Yeah.
especially as you're navigating the markets.
Okay.
It means paying attention to those early warning signs,
All right.
those subtle shifts in sentiment
Okay.
that can foreshadow a bigger downturn.
So you shouldn't just wait for the headlines to scream panic.
Exactly, because by then it might be too late.
So instead of trying to time the market perfectly,
Right.
it's more about being aware of those underlying currents
Yes.
and managing risk accordingly.
Exactly. And it works both ways for booms, too.
Okay.
Exuberance can also build slowly, feeding on itself until it becomes unsustainable.
Okay, so let's say I'm trying to apply this to my own investing.
Okay.
What are some practical takeaways from Selden's insights on panics and booms?
Well, first remember that markets are cyclical.
Okay.
What goes up must eventually come down and vice versa.
Right.
Don't get caught up in the hype, whether it's fear or greed.
So basically, don't panic and don't get too greedy.
Exactly.
Easier said than done, though, right?
Definitely. But that's where the second takeaway comes in.
Okay.
Cultivate a balanced mind.
Right.
Selden talks a lot about the importance of avoiding extremes of emotion.
Right. Both the euphoria of booms
Yes.
and the panic of crashes.
It's about staying grounded and making rational decisions based on careful analysis, not just gut feelings.
It sounds like a lot of this comes down to self-awareness,
It does.
understanding your own biases and tendencies as an investor.
Now, Selden also goes into detail about the different types of traders who make up this complex ecosystem.
Okay.
He talks about impulsive traders driven by instinct and emotion.
Always eager to jump into the action and ride the waves of market volatility.
Sounds kind of like someone I know.
Maybe.
But then you have the phlegmatic trader who's more cautious and methodical,
Right.
preferring to wait for the right opportunity
Yes.
and carefully strategize their moves.
They'll often use what are called scale orders to buy or sell at predetermined price intervals.
Okay.
Think of these like setting tripwires in the market.
Right.
They automatically trigger a buy or sell order when a stock reaches a certain price.
So it's like having a robot assistant to help you execute your trading strategy.
Exactly. And these scale orders can be incredibly powerful because they take emotion out of the equation.
Right.
They help to ensure that you're buying low and selling high, even when the market is going crazy.
That's really interesting. So how can I, as a listener, use this information to my advantage?
Well, understanding how these scale orders work can give you a deeper understanding of how prices move.
Okay.
If a stock is falling and you see a lot of buy orders clustered around a certain price level,
That might indicate strong support and a potential buying opportunity.
so it's like a hidden layer of information that can help you make more informed decisions.
Exactly. Now let's talk about one of Selden's most crucial points.
Okay.
The importance of mental attitude for successful trading.
Right.
He stresses the need to cultivate a balanced mind, avoid getting fixated on single ideas.
Wait, hold on. What does he mean by getting fixated on single ideas?
Yeah.
Can you give an example?
Sure. Let's say you read a news article that predicts a particular stock is going to skyrocket.
Okay.
You get so excited about this one piece of information that you ignore all other factors,
Right.
like the company's financials or the overall market trend.
Yeah.
That's what Selden means by getting a notion. You become so attached to this one idea
Right.
that you lose sight of the bigger picture.
So it's about avoiding tunnel vision and staying open to different perspectives.
Exactly. And Selden also warns against relying too heavily on hunches, especially for those who are new to trading. While intuition can play a role, it needs to be tempered with knowledge, experience, and objective analysis.
So instead of just following my gut, I should be asking myself, what's the evidence supporting this hunch?
Yeah, exactly.
What are the potential risks and downsides?
It's about making informed decisions, not impulsive ones.
Okay.
And one of the best ways to develop this self-awareness is through journaling or self-reflection.
What do you mean by that? Like keeping a diary of my trades?
Exactly.
Yeah.
By tracking your trades and analyzing your thought processes, you can start to identify those patterns and biases that might be tripping you up.
It's like having a personal therapist for your trading psychology.
That's a great way to put it.
You can uncover those limiting beliefs and develop strategies to overcome them.
And this is something anyone can do, regardless of their experience level.
This is all starting to make so much sense. It's like Selden is giving us a roadmap to navigate the psychological minefield of the market.
He really is. And the best part is that these principles are timeless.
Yeah.
They apply just as much today as they did back in 1912.
All right, so we've covered a lot of ground here.
We have.
We've talked about the speculative cycle panics and booms,
Great.
different types of traders, and the importance of mental attitude.
Yeah.
What else did Selden have to say that might be helpful for our listener?
Well, he goes into even more detail about specific trading strategies and techniques.
Right.
But I think the most valuable takeaway from his book
Yeah.
is the emphasis on understanding the human element of the market.
Right. It's not just about numbers and charts.
Exactly.
It's about understanding the psychology driving those numbers and charts.
And that's something that can give you a real edge in the market.
I'm really starting to see how these insights can help me become a more informed and confident investor.
That's great to hear. Remember, Selden's book is just the beginning of your journey.
Right.
There are so many resources available today that build upon his work and provide even more insights into the psychology of the market.
And speaking of resources, maybe you could share some suggestions for our listener. Who wants to dive deeper into this subject? Absolutely.
Yeah.
It's like opening a door to a whole new world of understanding.
It is.
But before we get too carried away with, further reading,
Right.
I want to make sure we wrap up Selden's key takeaways
Okay.
in a way that our listener can actually apply to their own, investing journey.
Yeah, that's important.
So what would you say are the top 3 things
Okay, let's see.
to remember from this deep dive?
Well, I think the first takeaway
Mm.
is to always remember that the market is driven by human emotions.
Right.
Hope, fear, greed.
Yeah.
These are powerful forces,
Okay.
and they can create predictable patterns
Right.
in how prices move.
So as an investor,
Yeah.
you need to be aware of these emotional undercurrents and try to avoid getting swept away by them.
Exactly. It's like being a good surfer.
Right.
You gotta ride the waves,
Yeah.
but you don't want to get wiped out.
So basically, don't let your emotions cloud your judgment.
That's it in a nutshell.
Easier said than done, though, right?
Yeah, definitely. But that's where the second takeaway comes in.
Okay.
Cultivate a balanced mind.
Go.
Selden talks a lot about the importance of avoiding extremes of emotion,
Right.
both the euphoria of booms and the panic of crashes.
Mm-hmm.
It's about staying grounded
Yep.
and making rational decisions
Yeah.
based on careful analysis.
Not just gut feelings.
Exactly.
It sounds like a lot of this just comes down to self-awareness,
It does.
understanding your own biases and tendencies as an investor.
Absolutely. And that brings us to the third takeaway.
Okay.
Never stop learning.
Right.
The market is constantly evolving,
Yeah.
and you need to constantly be expanding your knowledge
Okay.
and refining your strategies.
So Selden's book is a
Yeah.
fantastic foundation,
It is.
but it's really just the beginning.
There are so many great resources available today
Okay.
that can help you deepen your understanding of market psychology
Mm.
and develop your skills as an investor.
It's funny.
Yeah,
We started this deep dive by time traveling back to 1912.
over a century ago.
But in a way, Selden's insights
Mm-hmm.
have also helped us fast forward into the future.
I like that.
By understanding these timeless principles of market psychology,
Yeah,
we're better equipped to navigate the complexities of today's markets
absolutely.
and make more informed decisions about our financial futures.
Couldn't agree more.
And speaking of connecting the dots,
Okay,
maybe you could share some suggestions for our listener
sure.
who wants to explore these ideas further.
Well, if you're interested in the psychology of trading,
Mm-hmm.
a classic book I always recommend is Trading in the Zone by Mark Douglas.
Okay.
It's a fantastic deep dive into the mental game of trading
Okay.
and offers practical strategies for
Yeah.
overcoming fear, greed, and self-sabotage.
That's a great one. And what about for understanding
Yeah.
the broader market context
Sure.
and how these psychological forces play out on a larger scale?
For that, I would highly recommend The Misbehavior of Markets
Okay.
by Benoit Mandelbrot. Right. It's a fascinating exploration of how markets really work,
Okay.
challenging traditional assumptions,
Mm-hmm.
and offering a fresh perspective
Yeah.
on the role of chaos and complexity.
Those are fantastic suggestions, and I'll be sure to include links
Great.
to them in the show notes for our listeners.
Sounds good.
Well, it's been an absolutely enlightening deep dive,
It has been.
and I'm sure our listener will agree.
I think so.
We've uncovered some hidden gems from the past
Yeah.
and gained valuable insights that can be applied to the present and the future.
Absolutely.
So until next time, happy investing.